All right, listen, I really appreciate you both coming out today and kind of rethinking what we're doing here. So we've been waiting, right? We were waiting when rates were so low, it was super competitive. Then rates went up. We were waiting maybe for prices to correct, but that did not happen. And then we were going to wait for rates to come down. And now that started to happen. Any chance now is actually a good time that you guys might consider buying a home? I hear you. Listen, there are more houses right now. Housing prices haven't came down, but there's a lot of opportunity, lots of programs. Sellers are more flexible. I mean, anything I could say that would convince you guys to maybe not wait? Okay, I can see you guys are committed to waiting. I guess I'll stay in touch with you, and if something changes, let me know. Anything I can do, you let me know. I don't know, is there anything I can help you with, guys, right now? Like, I don't know, buy you a pizza or something? Hey everyone, it's Rayce Robinson, your favorite Florida mortgage broker, and we're going to cover some cool things in this video. Just how many people are becoming renters versus homeowners, and things about interest rates in the market, which I think will surprise you. But more importantly, one of the things that can be scary if you're deciding, should I buy a home, especially right now in this market where there's so many things, rates are going to go up or down, market's going to go up or down, is to look at data and let that be a guiding factor on the decisions that we make. So I took the data, I believe all the way back from 1960 on median housing price, uploaded it into ChatGPT, and we are going to ask ChatGPT some interesting questions about buying a home during the Great Recession. So the official start date of the Great Recession is December 2007. I asked it this pretty long question: assuming someone purchased a home at the median price at any given year, assuming they had a 30-year mortgage at a 6% rate and they financed 95% loan to value, during the time housing prices fell shortly after someone purchased a home, what is the longest period of time it would take for someone to no longer be upside down or have negative equity in the home, considering the market going forward from when they purchased and also relative to the amount of mortgage being paid down? Basically meaning if someone bought at a really terrible time in history, what's the longest it took for them to be back to even? And it referenced 2007. It didn't really give me what I needed, so I said measured in months, how long would it take if someone purchased a home in February of 2007? I picked February of 2007 because if you look at a chart here, really there couldn't have been a worse time to buy in modern history than February of 2007. And this said for someone who purchased a home in February 2007, it would have taken approximately 57 months or just under 5 years to recover from being underwater and having positive equity in the home. Then I also asked that based on the data uploaded, has there ever been a 10-year period where someone who purchased a home did not build wealth, and what was the average percentage of wealth created over a 10-year period for any given time for someone purchased a home? And ChatGPT said based on the data provided, there's never been a 10-year period where someone didn't make, basically positive equity on the house, and the average wealth created over that time period was 73.87%. Now, obviously the point of this video is not to say it's like 2007. Here in Central Florida, we had 25 to 30 months of inventory during the Great Recession. Right now we have 5. So there is no comparison. But a lot of this is just educating our clients, because I go to YouTube to get information, to put these videos together, to understand the market, and so much is negative. And if someone's a consumer, it must be so difficult to make a non-emotional decision. And people buy on payment. It's just a fact. If we could get Ferraris for $300 a month, everywhere you go, you'd see people in Ferraris. And people buy on payment. Why did pending home sales go up 2.5% in September according to Redfin? That's because rates dropped down. All of a sudden, rates kick back up over 6.5%, and mortgage applications fall 17%. That's just to show just how much the rate or payment matters when people are buying a home. When we look at 30-year fixed rates, we can see that the 30-year rate is now at 6.68%. Remember, everyone's rate's different based on credit score, down payment, discount, origination points, all that kind of good stuff. I'm more interested in the trend. And look at this. It doesn't surprise me that we got to September, into September, look, rates were down at their lowest point. Get to the beginning of October, bam, rates shoot up well over 6.5% and haven't looked back since. That's just going to show, again, this is a mortgage channel, that I look at rates all the time. When clients come to me, what do they say? What's the rate? What are they really asking? What's the payment? So we have to educate clients. In my opinion, if you can buy now, you're going to buy with way less competition. Fed's going to meet this year. They're going to cut rates. Unemployment's likely to go up. Just not me voting for or hoping people get out of work. But as far as the housing market goes, lower rates push more people into the market. And that is going to be a trend throughout this year. And at some rate, I'm going to call it 6% or less. We get more and more demand, and we don't really get a lot of supply that gets unlocked. Now, speaking of homeownership, I saw this article because a lot of people said homeownership is kind of, going down, especially when you look at Gen Z about them wanting to buy a home. And this was an article on where homeownership is the highest and lowest. And I thought this was really interesting. Out of the 131 plus million households, 45,646,491 are renter occupied. Meanwhile, 85,685,869,000 are owner occupied units in 2023, putting our housing ownership rate at 65.2%. They list this kind of top 10, which I'm not going to go over, but the ones in Florida, Ocala, Palm Bay, Northport, I think I missed one there, Naples, I think, are in this top 10 of highest home ownership rate. I really like this. You could probably look this up yourself. They break this home ownership rate down by county all over the United States. And I wanted to look at Central Florida. And so when we look at Orange County, 57% home ownership rate, Seminole County, 65.7% rate. And then like the surrounding counties, Osceola, 65, Volusia, 72. Let's do one more here. Lake County, 76%. Just showing that the home ownership is still strong. People are still buying. Obviously, a lot of things are impacted by rates and market. Florida's going through this whole cycle with hurricanes. We do have across the U.S. when we look at as far as inventory goes, Florida is on the upper end of some of the states out there. A lot of that is very particular areas. Here in Central Florida, everywhere is up as far as inventory goes, but we are not historically high. And as rates fall, those numbers are going to drop. Now, there's no guarantee. Anything could happen. The Fed could change their mind and say, hey, we are going to start raising rates again. I just don't see that happening. Rates are going to fall, pushing people in the market, and that's going to create more competition. And that's really the conversation we're having with our clients is looking at the data, looking at the information. There's just no way for the average person working a normal job, take their rent money, invest in a home, and build 73% wealth historically over a 10-year period. And just to end here, this is the Mortgage Purchase Application Index, and you can see just how low mortgage applications are historically, just compared back to 2000. So meaning that obviously rates matter, and rates got close to 8%, and that really killed demand. So we are going to be tracking for the rest of the year. A couple of things that I'm really interested in. One, did there hurricanes, higher insurances, some of this stuff going to affect parts of Florida, coast of Florida? Are some areas like Central Florida going to, be the boon of those unfortunate storms? Also, is rates as rates fall, which they're going to most likely. I believe rates could get closer to 5.5%. There's no way to know by the end of 2025. What does that do? Does inventory start falling, depending home sales, and at what number does all this locked up equity, meaning these homeowners that got really low rates, start putting these houses on the market, and we get into what we call a balanced market? Now, technically, we're in a balanced market with 5 months of inventory, but the trend is definitely getting unbalanced in favor of buyers. And if you're a buyer watching this, this is the opportunity to buy a home. Anyways, we'll track the data. That's what it says for this week. As more information becomes available, we're going to track it right here. Have a great day, great week, and I'll talk to you soon.